So I remember speaking to the dentist not too long ago who almost gave up on buying her dream home. The issue wasn't affordability, they were earning really well. It was the way their income was structured. The conversation stuck with me because it highlighted something I've seen many times. It's not always about how much you earn, it's about how it looks on paper. Now, if you're a dentist, your payslip or your tax return doesn't always tell a full story. You might be a practice owner taking dividends, a locum juggling different practices, or a salaried associate with private and NHS income streams. On paper, it can look messy, and to a lender, messy can also mean complicated. Now, here's a key thing: the challenge. If a lender can't easily understand your income, they may underestimate what you could borrow, or worse, decline your mortgage application altogether. That's the danger of leaving things unlocked. Over the years, I've noticed a few common patterns. NHS versus private income. Many dentists have a split between NHS contracts and private patients. Some lenders only want to see stable NHS portion, ignoring private work, even if it makes a big chunk of your earnings. And a classic: dividends and retained profits for all you self-employed owners. For practice owners, income often comes as dividends, but if most of the profit is left in the business, lenders might not count it, even though you have access to those funds if needed. And let's talk about locums. Locums can often earn more than salaried associates, but because the income is spread across different practices, some lenders see it as less reliable. And the classic case of self-employment and PAYE: some dentists take a salary from their own limited company, top it up with dividends, and they also pick up the odd occasional PAYE work elsewhere. To a lender, this can look like 3 different jobs rather than one profession with multiple income streams. And something I see time and time again is the timing of your account. This is key for all you dentists out there. I've seen cases where someone's latest tax return didn't reflect a recent increase in earnings, which meant the lender's figure was already outdated. So what's the lesson here? Complex income doesn't have to be a barrier, but it does mean being proactive. Make sure your accounts, your payslips, and your contracts show clearly the reality of your earnings, which can save you a lot of frustration later down the line. The big takeaway from today is the more you can help lenders see the full picture, the smoother your journey is going to become. In other words, your income may be complex, but your mortgage doesn't have to be.